An unsynchronized opening with moments of stepping back, Maurice. That's what we're faced with. How does that redefine the narrative for the amount of risk that you want to put on at the moment? Good morning. Welcome back to Vision.
Good morning, man. It's very happy to be with you. We knew it's pure logic that less restrictions means more infections. The only question actually is just are we able to handle these local outbreaks? And I'm sure that definitely, based on what we see in Asia and based on even how the UAE has remarkably handled the pandemic, there's no doubt that we can handle these local outbreaks. So we have actually reduced risk, but it's not that much for that reason of the coronavirus cases being up. I think we have to live with the virus, and it's part of the market rationale already.
OK, let's talk about your rationale, because you've been very forthright. You materially took risk off in February. You doubled up in March. Well done. And you remained long. Well done. But you expect a turbulent time ahead. With turbulence, I know you're an equity man, so with turbulence, how do you prepare for that? Is it through options? Is it through VIX? Is it through futures or another vicarious trade?
Well, first, thank you very much. I must say that we have been very lucky on timing. Yes, we cut risk in February, we had it in March, and we stay long until June. And we cut because we expect turbulences. The point with the turbulences is that, it was the market rally was more or less incremental good news on policy, on reopening, meeting a pool of terrified investors. People were just out of the market. So it was easy to think that it was going up. Now, looking forward, valuations are elevated, not crazily, but elevated enough to create vulnerability. And we think that markets are simply priced for a perfect recovery. We think it will happen in 2021, but also a perfect trajectory. And this perfect trajectory will be questioned by the virus, by geopolitics, by US elections. So we expect some volatility. We don't use options because the VIX is quite rich already. We very simply reduce the weight of developed market equities, and I think it's a very simple way to do.
OK, yeah, and look, a number of equity people would say to me that the options on the VIX are expensive. There's a cost of carriage involved in that. For the brave people, of course, you can write out the money options and you can fund that. Right, let's get to the banks, because I've put my money down, Maurice, that today is a defining day. Of course, I've leaned into RBC. It's what a wonderful phrase. The results will be confusing, sloppy and shocking. So if that's the backdrop to the banks, we're looking at provisions as being the highest since 2008. What is my risk here? That they ratchet higher and that we are underestimating what a 9% unemployment level will be at the end of the year and the consequence for lending and borrowing.
First, I agree with you. This will be a very interesting set of results from the US mega banks to get a better understanding of what it is to bank during the most brutal recession ever. Having said that, you've noticed, well, there is the corporate side, there is the individual consumer side, and on the consumer side, you've noticed that the actual income of US people was up during the Q2 because of all these measures to support the payrolls and everything. I don't expect anything to be too wild on that side. On the corporate side, we have this inundation of liquidity. So of course, provisions are up, but I think that banks in particular, and probably many listed companies, they have set expectations in a manner that they made sure that it's going to be beaten. And I would be much more interested in their guidance looking forward, assuming there is any guidance, because I don't know, maybe 1/3 of the company have just withdrawn any kind of forward-looking statement. I think they have to come back and to say, okay, what are we going to do? I'm not worried about the level of capitalization of bank in the context of massive liquidity injection. There is no systemic risk whatsoever. It's about their profitability. Yes, quarter will be lower, but trading was super high. Everyone was trading everything during this quarter. So it might be a good one. I would focus on guidance.